Okay, so yesterday I did a video on the best checking accounts that offer the highest interest rate, and I forgot to include the Fidelity cash management account. And the reason I kind of forgot it is it's kind of a hidden gem. And like a lot of these brokerage accounts, they don't seem to market it as much as these companies like Ally Financial and Capital One, where they post a huge rate on their front page, and they seem to market it a lot more. This Fidelity one is you have to dig kind of deep, sort of like E-Trade, to find the details on it. So if you go to the Fidelity website and you go to products and you go to spending and saving, if you go to spending and saving, you can actually find it there. So you go to spending and saving, and you see their Fidelity Bloom, which is their savings app, which is sort of like I think it's sort of like Chime, or it's like Discover their app. So they give you money mostly when you spend. So I'm not a big fan of that, using your debit card to spend. You'll also find the credit card that gives you 2%. I have this. That's a nice credit card. And then there's the cash management. I already scrolled past it. So cash management account, you can see here it says no account fees or minimums. ATM and fees are reimbursed globally. Now it says that, but when you look into the details, it says that there may be a 1% foreign transaction fee. So if you look at the Charles Schwab account, they don't have a 1% foreign transaction fee. So I think that the Charles Schwab is going to be a better bank account globally. This account would be fine if you're in the United States, but overseas, I would stick with the Charles Schwab. This one, you get a free debit card, checking, and bill pay, and they have the mobile app where you can upload your online checks. It's FDIC insured, and I think this is up to like $1 million. They have multiple bank accounts, but you're probably not going to put that much money in that sort of thing anyways. So you can't really find the rates until you dig into the details, and I have it pulled up here. So the rates that they give you are really high compared to what's available. So this is the current rate on November 11th, 1.57%, and it doesn't matter what your balance is. If you've got $2 or $1 million, it's going to be 1.57%. And this is FDIC insured, so it's not like some Bitcoin thing where the company is going to go bankrupt and take it with and take down your money with you. This is protected. There's also a secondary option, an overflow, money market overflow, which is not FDIC insured, but it's relatively safe. It's a government money market account, and the 7-day yield is 3.26%. I'm not sure. This particular account is not open to outside investors. This is only for this type of account. Once you sign up, if you elect for it, you can't just buy it as an ETF or something. So this one is not FDIC insured, so you could actually lose this one. So it's kind of a toss-up. I'm not sure whether if Fidelity had a savings account that offered FDIC 3-point-something%, I would say that's going to be very competitive with E-Trade. Now with this 7-day yield, when you actually start looking at the performance, the performance isn't so good with the government money market so far. If you look at the details, and so I'm not a huge fan with the interest rates going up so much. I think this a lot of people are staying away from the money market with as the rates go up. They're kind of scared of it. So if you look at E-Trade right now, they're offering their savings account FDIC insured 3.25%, and they have a checking account which offers pretty much next to nothing, like 0.05% or nothing. So I'm sort of tossed up between which one's better, the E-Trade one or the Fidelity. You can move money between the savings account and the checking on E-Trade, really quickly. So that's a nice thing, but it is a little bit more work, but that 3.25% may be worth the effort. Whereas with Fidelity, you don't have to really move the money around. You can just keep it in there and get the 1.57%. And this may change. So I mean, it could go down, it could go up. So that's one thing to consider also. Fidelity also they have a good, nice offering with the 2% Fidelity card. A lot of that money is automatically set up when you spend the money on the credit card to go to your Fidelity account. So the cash will be accumulating into your Fidelity account, and then you could move that to the cash management account and get a higher rate, and then pay some of your bills with that money that comes in from the credit card. So that's kind of a nice thing. And then they also have the Bloom account, which is a savings account, but to me it's just kind of, and there's actually a promotion right now. I think you can get $50 if you put in $300 or something. But this is one of these kind of accounts where you've got to spend money to make money. It's not like a credit card where you spend $1,000 and you get $200. This is like a small bonus initially, and then in order to get interest, you've got to be basically using your debit card. So I'm not a fan of using the debit card for regular purchases. It's when you can use a credit card. And if you look at the rate, it doesn't look any higher than what you would get with the credit card. So I'm not really a fan of this Fidelity Bloom so far. But I would say it's a toss-up. If you're a Fidelity person, they've got a nice interface just like E-Trade does. If you've already got the credit card with the 2% Visa card with Fidelity, and you've got their brokerage account, and you use their products, maybe try the cash management account. And I would say if you're a E-Trade person and you've got a lot of money in E-Trade and you're using their services, maybe go for the premium savings account and try them out. And if you got both, you could do both of them. But I would say for me, I'm kind of I have more money in E-Trade than I do with Fidelity, but I'm tempted to maybe try out the Fidelity because I do like a lot of their services and their products. And it's a shame that Vanguard doesn't offer more services like checking, and really it feels like they offer low prices and low expenses, but their interface is really lacking. They don't offer many features like Schwab or Fidelity as far as research and the nice interface with the modern features. So Vanguard is kind of a place where you throw your money and you forget about it. But if you're wanting to actually do stuff regularly and move your money around, buy and sell stuff, I prefer Fidelity, E-Trade, and Schwab. So anyways, it looks like so far, the number one, the highest interest rate brokerage checking account or cash management account is Fidelity. So it's higher. This is 1.57% is higher than the 0.4% that Schwab offers, and E-Trade offers, like 0.10 or 0.05, which is next to nothing for their checking. So if you're just focused on the checking aspect and you're wanting to move away from Capital One and some of these lower interest rate places, I would say try it out. I probably will soon. So anyways, that's my video today. Have a good one. And like and subscribe maybe. Thanks.